Market conditions remaining bearish in this bull market. Continuing to see a lot of volatility right here. Saw another nasty reversal yesterday, and we're seeing that bull market rank sitting at 25.33 and starting to curl down or continuing to curl down from these extreme levels. Currently, we're seeing momentum really sharp to the downside once again, right at that extreme level, and holding right there. Obviously, we could move back up from these levels. We are at extreme to the downside. Breadth holding steady right here in the middle of that zone, and sentiment continuing to be volatile right here, having a pretty significant pullback, then another rally back to the upside, another pullback here again yesterday. Let's take a look at the buy-sell ratio. Buy-sell ratio sitting right at 0.25. So we're continuing to see weakness in that buy-sell ratio. Anything less than 1 is going to give us this red line above the green line, and that means bears are in control. If you mouse over this number right here, you can see that we've got 25.17 to the downside, 6.36 to the upside. So continued weakness in the overall market. We are extreme, though, to that momentum, seeing to a really sharp move to that downside, and volatility as well to the upside. And bonds, which we've also been talking about here a lot in the last few sessions, also pulling back a little bit from some of these extremes. So we're seeing extremes really across the board right here, and that is going to continue to create some volatility in the markets. We're seeing volatility. VIX, which is had that really sharp spike the other day, is pulled back, but still in that that 15-17 range. That's reasonable for a possibility for some upside here. But S&P 500 has a lot of work to do, and it's continuing to show bearish tone every time we see a range. Now, we've been talking about these ranges, and we had a rejection at that 530 level on SPY, and looking to slice back down through that 618 area on this corrective zone. If we look at a 1-year time frame on this, we're seeing that next range of support. We got the rejection right here at 529. Rejection just meaning that we've attempted to go above that level and reversed. So we're getting resistance now at these levels. So we've got multiple levels of resistance. S&P 500 has a lot of work to do to get positive again. And that 505 range looks like it could be the next stop for a retest, or at least the lows that we had a few sessions ago. We're extreme right here and can certainly get more extreme and be watching for some bounces right here, but it's certainly a time to keep the powder dry and be waiting for some of this volatility to settle out. TLT, we also are seeing bonds. We've been talking about these. We've seen these really sharp run up in bonds as the market is anticipating recession and really wanting the Fed to lower and cut interest rates. This means that as bonds are moving higher, interest rates are moving lower. So the bond market is pricing that in, having a little bit of a pullback here in the last few days as markets had rallied a little bit, and bonds had gone straight up there for a few days. SHY also continuing to show some strength. It's holding tight in the momentum zone, at least for this last day. Some gaps right here. Keep an eye on those shorter term rates. These shorter term rates, SHY, that 1 to 3 year treasury, are really one of the ones to be keeping an eye on. And ultimately, the Fed has got to do something here to, they're stuck in a tough place to fight inflation, but also now fighting recession. And markets are saying, Fed, you better get your act together and start cutting right here at these levels. Let's take a look at Dow and NASDAQ. Also, triple Qs still continuing to get punished right here. And if we look at the triple Qs on the 1 year time frame, let's see where our next stop may be. We've already got a full 50% retracement, and we're also back down into some of those support ranges that we've got right here. So we could see some retesting, some bouncing, some volatility on the Qs, the triple Qs here inside of this zone, that 441 to 422 range, and then watch for an additional support range around that 422. If we see another bounce and some support starting to hold around these levels, that could start to create some more demand. We could start to see some some demand start to come back in. But we've got a lot of work to do. We're extremely oversold, and we're at areas where we could get a relief rally or a bounce. But that being said, it's not looking like it's going to be happening real soon. At least on that reversal bar that we saw, that was a pretty big reversal bar. And but that most recent low right there, keep an eye on that for the triple Qs. The Dow Jones Industrial Average, also a real similar pattern in that 1 year time frame. Most of these are still holding up pretty closely. That's now broken down between, under that 236 zone on the 1 year time frame. So some weakness there in S&P, Dow, NASDAQ, everything just continuing to see weakness. And there's some space between the next real support area here on the Dow as well in this 1 year time frame, looking at that 379 range potentially for Dow. If we continue to slice that, those may be areas to be aware of and to be focused on. Let's jump over to sectors quickly here. Continuing to see strength in utilities as markets are looking for kind of that safety play. Utilities have held up pretty well during the last few market sessions, and we're also seeing just overall weakness, really kind of that combination of a few buys, a few holds, a few sells, and there's some certainly uncertainty across the board in the markets. Commodities, let's look at gold. Gold has been in this momentum zone, still holding up also, but really, there's obviously no real major fear where everything's piling into gold, but it is still trending higher. Everything else across the board on commodities, you'll see these ranks are still relatively light. We're just seeing weakness in commodities. Silver continuing to fall, oil continuing to fall, but had a decent bounce yesterday, up 3%. Let's bump that out to that 1 year time frame, see what our perspective is there. Also 71, and it's got some work to do. When I say work to do, I'm just saying it's got resistance here. The path of least resistance is still down, and these resistance areas, there are some support ranges, though, pretty significant ones for oil right around this range here. Not surprised to see a little bit of a bounce and certainly some volatility in USO. If we jump over and look at muscle stocks, we've got Axon, which is used to be Taser. They do a lot in that safety protection area. Big move here, 18%. And we also had Stride, which is in that learning space. Also had some good earnings, up 9%. So there are pockets of things that are working out there. It's really going to be individual stock picking, probably for the rest of the summer and going into September, and looking for opportunities there. That'll do it for today's update. Everyone have a fantastic day today.